and it's time for another Macro Monday where I get you ready for the week in 5 minutes or less. Just a reminder, as always, this is just a small snippet of our full Macro Monday newsletter. So if you're looking for more in-depth coverage of this week ahead, I will include a link to our full newsletter for this week in the description of this video. Okay, let's get into it. Starting as always with our chart of the week. So with core PCE now at 2.7% in May, inflation seems to be entering a zone that gives the Fed some comfort. This probably means that attention is set to quickly shift back to the labor market. And this week in particular could be a turning point. So on the next slide where we go over the calendar, we'll cover the massive amount of labor market related data series that are going to be released this week. But on this slide for our chart of the week, we do want to specifically call out the JOLTS report coming out on Tuesday. The job opening series may confirm a major shift that's developing in U.S. labor markets. And that is the U.S. labor market could be back in surplus territory for the first time since 2021. And again, this is what we highlight here in this chart, in this week's chart of the week. Really, if you look at the chart, the labor deficit has been a trend since 2017. That's when we see the red line, which is the number of unemployed workers, first fall below job openings. COVID obviously was a major event that disrupted labor markets, but if we set that aside, we've consistently had more job openings than workers available for almost a decade, which brings about inflationary pressures. A change here, and we'll get this data this week on Tuesday, a change here could see the Fed focusing more on labor market health and less on inflation when it comes to its future interest rate decisions. Now let's take a look at the week ahead. As promised, we have a lot of labor market data to sift through. First, there are the employment components of the PMIs, which we have many PMIs spread across this week. On Monday, you will see the Chicago and Dallas PMIs, and then the market and ISM PMIs are on Tuesday and Thursday. So again, we'll be focusing on the employment components of those four series. Then there's the aforementioned JOLTS series on Tuesday, and then the Bureau of Labor Statistics Employment Situation Report on Thursday. There's a lot of data series on Thursday this week. As you know, Friday is July 4th, so no data then. Specifically, we're going to be looking at the unemployment rate. That is because the Fed still expects the unemployment rate to rise from 4.2% to 4.5% by year end. And surveys suggest, so if you look at some of the softer data, we've already passed the bottom or the trough in the unemployment rate, and we could be headed towards 5%. Obviously, that sounds like a big increase, but we've already seen cracks start to form in the labor market. And this will be something that the Fed watches closely. And I think this is something, it's the reason why you're seeing the greater likelihood of an interest rate cut by September. The last time I checked, that was up in the 90% range. So people are really ready to expect the Fed to cut rates sometime this fall. Thanks for watching. That's what I'm going to leave you with today. I hope you guys have a great week. Don't forget to subscribe to the channel, and I will see you right back here next week for another Macro Monday. Happy July 4th week. Hope you guys enjoy your 4th of July weekend.